Good morning. Welcome to our QuickBooks 101 webinar presented in partnership with Small Business Consulting. My name is Richard Pilston. I'll be your host for today's webinar. Today's webinar is brought to you by the South Carolina Small Business Development Program, our Development Centers, and the SSBCI program, in particular, State Small Business Credit Initiative Program. The South Carolina Small Business Development Center provides the tools, training, and resources to help small businesses grow and succeed. Our mission is to advance South Carolina's economic development by helping entrepreneurs grow successful businesses. Now, we do this through 20 locations, which are associated with the large universities in our state. And we have over 55 business consultants to help you with your needs. The State Small Business Credit Initiative has several services that we provide, including the financial counseling and loan packaging. That includes business plans, accounting and bookkeeping advice, including helping you set up your QuickBooks or other accounting software. And we do provide limited legal advice through our partners at Turner Pageant Law Firm and the School of Law at University of South Carolina. If these services are not sufficient to your needs, the SBDC offers a wide variety of services across a wide variety of topics, including financial management, procurement and certifications, business training workshops and seminars such as this one, marketing and growth strategies, and international trade, among others. So with that, I'd like to introduce Christy Dudgeon, who is a managing consultant at Small Business Consulting, and will be walking us through our QuickBooks class today. Thank you very much, and Christy, you can take it over.
Excellent. Okay, we are talking about Intro to QuickBooks today. As Richard mentioned, my name is Christy Dudgeon. I'm a managing consultant with SBC Consulting. I'm an entrepreneur. I'm also a small business consultant, and feel free to link with me on LinkedIn. Obviously, have a very big network of small business owners. I teach QuickBooks throughout the country. In many webinars such as this, as well as marketing and other types of finance as well. I am a QuickBooks Level 2 Pro Advisor, as well as an Intuit certified bookkeeper. I started in QuickBooks just as a business owner that had no idea what I was doing about 20 years ago. I actually wandered into a women's business center and said that I needed help. At that point, they matched me up with someone, ironically, doing exactly what I do today and taught me QuickBooks. So over the years, I've seen, it's been about 25 years now, evolution of QuickBooks through many iterations and many phases. One of which has just happened within the last month. So if you are already a QuickBooks user, or if you have looked into QuickBooks prior and have not recently within the last couple weeks, everything has changed. It looks very different. We have a whole new user interface and a whole new user experience. That has made it interesting for anybody who is in the learning phase. But it is better overall once everyone gets used to the new look. So with that, a lot of my training materials have changed as well. The videos are being updated constantly on YouTube. And also the test system, which I'm going to talk about in just a little bit, is currently in the old platform as opposed to the new platform. So that's going to cause a little bit of difficulty with talking about things today, because obviously I don't want to show you the ways of old. I want to talk about the ways of new because it is so different. So what can you expect from this training today? I'm going to give you an overview of QuickBooks. I'm going to talk about the different subscription options, set up best practices, terms that you need to know, especially those particular accounting terms, so that you can set that foundation well and get to know the system, not just from using the software system, but actually knowing what to do once you're in there. The chart of accounts, what it is and why it is so important, different features of QuickBooks that you might encounter, The difference between proactive and reactive accounting, you can do either or a combination of both when you're to have conversations with not just me, but a discussion within this entire webinar. So the first question that you can answer there is, what is your relationship with QuickBooks, so that I have a better understanding of kind of where everybody is at. Are you new? That would be letter A. Do you have a subscription but you're lost? That's B. C, you currently use QuickBooks but you need help with a specific issue. Or D, you're using another accounting system, even if it's a spreadsheet or a piece of paper, but you want to learn more about QuickBooks. So if you guys could just drop that in the chat. It looks like we've got a wide range of users or non-users, I guess you could say, that you're brand new to it, which is pretty typical. So welcome to all of you. Hopefully you're going to learn quite a bit today. I am going to cover a ton of material. I promise you are going to feel overwhelmed when I'm done with it. That is typical. Thankfully, this is being recorded, so obviously you can come back and reference a lot of the things that I'm saying. So an overview of QuickBooks, really, what is it? So Intuit is the parent company of QuickBooks. They also own things like TurboTax, Credit Karma, and MailChimp. QuickBooks is a bookkeeping software that generates reports. One of the biggest frustrations that users have, me included, at some point during our journey with QuickBooks, is that we want it to do something that it's not actually designed to do. Maybe we want it to be an operations system. Maybe we want it to be a CRM. It's not designed for that. It's truly designed to be a bookkeeping software that generates reports. And at the end of the day, if you can remember that part of it, that will help you alleviate some of your frustrations. It also offers additional services that easily integrate directly into QuickBooks. So these are Intuit products themselves. They will often sell them to you or try to sell them to you. So these are things like QuickBooks Payroll, QuickBooks Payments. New things are coming out, obviously, with the new interface. They have lots of new products and they would love for you to add those onto your subscription. In addition to those that QuickBooks directly or Intuit offers, there are many third-party integrations and connectors that are available. Now that there's over 10 million global users, that means there is a lot of demand for other products to be able to work in conjunction with it. So these are more of those higher advanced operating systems that I was talking about, or CRMs, or inventory control systems, e-commerce connectors, POS systems, tons of third-party type connectors. That doesn't mean they're going to be free to be able to connect them, but some of them are, just because of the agreement that QuickBooks has with these other third-party integrations. There are multiple subscription options for QuickBooks Online, or QBO, as lots of people call it. Most of you starting out or as a new user are probably going to want to just start in Simple Start. It's the base of QuickBooks Online. It is typically you can get some kind of discount for it for the first 3 months, but it runs about $38 a month once you're out of that window of where you get that discount. You do get one user, which means you only get one login. If you ever intend on having more than one person logging into the system and managing your finances that are outside of an external bookkeeper or accountant, you are going to want to upgrade, just for that reason. I always mention this is about protecting yourselves as a small business owner. I've unfortunately worked with multiple small businesses where fraud or loss of money has occurred, and sometimes it's in the millions of dollars. And if you've only got one user, one login that's identical to yours, it's very difficult to prove who actually took the money or made the changes within QuickBooks. So it is well worth The upgrade, there's actually another subscription between Simple Start and Plus that's listed here. It's called Essentials. They don't talk about that one as much, but it does at least give you 3 users. And that's the one where if you've got more than one person. So if you've got an office manager or someone like that, that's even going to be invoicing or just, doing sales receipts, something like that. Definitely protect yourself. I cannot state that enough. I've seen it entirely too much. With Simple Start, though, you are going to get all the basics that you need with QuickBooks to run and operate your business from a bookkeeping standpoint, to generating those reports. Obviously, as you continue to grow in subscriptions, and its subscription amount per month, you're going to get more and more features. With the update with the user interface, we now have a lot of AI integrations that are happening, tons of AI things happening. And those, of course, get more, they get pretty cool actually, the higher the subscriptions that you go. So lots of changes happening there. But you can move to those higher tier subscriptions at any time. So usually when you're just learning, that's why I recommend that you stay with the lower tier, save yourself some money, right? And then as you get more proficient in the system, you can certainly upgrade. You can also downgrade at any time. So if it for any reason your business needs change, or maybe you thought you needed one of those higher tier items and you don't, you can downgrade that subscription as well. All of the subscriptions, regardless of what tier that you're on, include an app that you can utilize on your phone or on a tablet, iPad, which is a really great app. It's pretty cool, does lots of things, which I'm going to walk through several of the things that it does. You can accept mobile payments with that app. Right here, it's actually showing the little POS sensor. However, now there is a tap option with QuickBooks POS system. The only downfall to this POS system, if you were considering using one, if you're using Square or Stripe or something like that, and you were considering using QuickBooks, is that QuickBooks does not allow a tip option. So if you are a tip-based business, QuickBooks POS is not even one that you're going to want to explore. I've unfortunately had clients that have figured that out after they've gone through the whole process. So but if you just are accepting credit cards and no tip, people can tap now on your phone through that app, and it's pretty cool. You can also create invoices. You can create expenses as well, straight for your phone from your phone. So if you are a project based or service based or anything like that, and you want to stand there in front of your client, literally give them the invoice, they can pay right back through their email. You can generate these directly through this app on your phone. This is one of the best features, in my opinion, of the app, especially if you are a on-the-go entrepreneur. You walk in someplace, you purchase something, you get a receipt, you can literally take a picture of that receipt through the app, not necessarily just on your phone. Take it through the app, enter what that expense was right then. It gets recorded in the system. You've got an image of the receipt. You don't have to think about it again until you come back in and you're finalizing your bank statements for the month. So that is probably by far, in my opinion, the best cool feature, because I'm one of those people that's always on the go, tend to stuff receipts in my car and then forget about them and throw them away later. And then I don't have a copy of them like we are supposed to as good business owners. Um, you can also attach those receipts to the invoice. That's what that last slide was. So if you are billing it back to a customer, or on an invoice, so a billable expense type situation, you can attach that directly to an invoice as well. I did mention the many AI integrations that are starting to come out in QuickBooks. I feel like with these, there's a new one rolling out every single day. A lot of these are in beta testing, so you as a new user may not see them, and then suddenly one day they're going to appear. But there is the ability for it to, pull information directly off of a receipt, directly off of an invoice, off of a bill. The bank statement one is pretty cool because it can integrate between the bank statement and what you have in QuickBooks and literally tell you what's missing or what's wrong. If you've ever done a reconciliation before, or in QuickBooks Desktop, maybe, it can be a tedious process. It is no longer now with a lot of the AI information that's coming out. But Look for this to continue, as with the rest of the world, as AI continues to improve and become part of our daily lives, it is being integrated, obviously, into things like QuickBooks and how we maintain and understand our finances. Have you needed financial reports in the past 12 months? This is a chat question, yes or no. You guys can answer. I assume most of you are probably going to say yes, especially if you are in a business. If you have not, there is hopefully a reason for that, because if we are running business, we should definitely need a financial report, or we didn't know how to generate one. Typically, we get asked for these. If it's not an internal thing, we get asked for these because we're trying for some kind of loan or for funding. And of course, they're going to ask us for our financial reports. Also, if we're filing our taxes at the end of the year, or when it comes tax time, our income, our profit and loss, that's an interchangeable phrase, profit and loss or income statement. Our tax accountant has probably asked us for that because, of course, that's the bulk of the information that is needed for us to file our taxes. So why do we want to maintain our finances in a software like QuickBooks or any financial software for that matter? Number one, someone probably has asked us for that profit and loss balance sheet or financial projections, as I mentioned. As a business owner internally, maybe we needed more space, more time, more things to operate our business. And we didn't know if we could do it or if we could afford it. And we weren't really sure where to even start with that. Well, that's obviously going to be in the data that we would receive and those reports back from our financial system. Do we pay ourselves as a small business owner? Unfortunately, we often are the very last person to get paid. And maybe someday we want to get paid. And so, ironically, with this one, I was working with clients in West Virginia not that long ago. And this was the very reason that they were setting up and learning how to understand their financial reports better. And it's because they were in business for multiple years and they hadn't paid themselves yet, and they couldn't figure out how to do that. Well, obviously, it's all in the numbers and in their projections. And so the more that they learned about that, they started with a small salary and, a plan over the next 3 years to get to a full salary. And then that last one, tax preparation. That is one reason that we need to be organized financially. It can make tax time a pretty simple process as long as we've got the information that we need right in front of us. So let's talk about some QuickBooks setup and best practices when we are setting up. If we were to ask Google how hard is QuickBooks to set up, it's going to tell you it's pretty simple. QuickBooks is going to tell you that as well. So it's a user-friendly interface. It's even gotten more user-friendly recently. It offers a range of training resources such as tutorials, videos, online courses that can help you learn the software quickly. However, what is in bold is the key to all of this. If you have no prior experience with accounting or bookkeeping, it may take several weeks or months to become proficient in using QuickBooks. The software itself, the setup itself, is only going to take you a couple minutes. Once you're in the software, learning how to navigate it, you can watch some of those tutorials and videos like I mentioned, or attend something like this, or work one-on-one with a consultant, and you can learn the actual workflows pretty quickly. However, understanding the bookkeeping side of things or the accounting side of things is really where most people struggle. So when I talk about the help menu in a little bit, we're going to talk about, is it really a software issue or is it a user or understanding knowledge issue? And really what that comes down to is that accounting or bookkeeping side of things. So we're going to dive into a lot of these terms. So hopefully, whether you have started using QuickBooks already or you're going to start using it soon, once you learn these terms, it will really help you as you start to navigate the system. So what can we really expect with the QuickBooks setup? So if I go to QuickBooks Online right now and I say I'm going to start my Simple Start subscription, and it's going to actually send me a little thing that says get started, I'm going to click that button. So what happens? I answer a few questions. It's going to tell me to connect to my bank accounts, and then I'm on my own. And this is what most people look like at this point. because after answering those few questions, it literally just drops you in the system and you're on your own. And you don't even know where to go from there for the most part. So, before you even answer those questions, though, there are some things you should probably ask yourself or answer these series of questions because they will come up once you're in the system. So if you have a general idea of what you need for your business, then it's good to ask yourself those questions ahead of time. You will need to answer what is your legal business entity in those setup questions that I mentioned when you ask a few questions. So, are you a sole proprietor? Are you an LLC, an S Corp, a C Corp, a partnership, or a nonprofit? It's going to ask you the sole proprietor, partnership, LLC, S Corp, C Corp. And actually, LLC is not even an option to choose because if you are an LLC, as far as financial accounting is concerned, you're still going to be either a sole proprietor LLC or a partnership LLC. So, those are the questions that we'll ask. You'll also need to know what your tax year is. The system will default to January 1st to December 31st for a typical tax year. The fiscal year will be the same. However, if yours is different for whatever reason, you will need to make sure that you go back into the system once you're in there and change that fiscal year so that it's correct. Are you going to be accrual or cash basis accounting? There are two different types of accounting. Most of you will probably be cash basis. That means when you earn cash or you receive it literally in your hand or in the bank, or when you spend it, that's cash basis. The other accounting is accrual, and that means you've invoiced someone. So basically, you're taking the revenue there. It's more of a higher level of accounting. The system will default to accrual when most of you will want to be in cash basis. So that will be something that you will need to update and change. Do you have more than one business or do you have multiple entities that you need to track? That's going to be really important during your actual setup, especially with your chart of accounts. Banking and money flow. Do you already have separate business bank accounts and credit cards? If you do not, you will want to go ahead and do that because, one, it's important business practice to have separate business from personal accounts. Also, in the system, you are not going to want to put any personal information or personal transactions in here. So you are only going to want to consider using your business accounts. And we'll talk about that more again in a little bit. How many different bank accounts or credit cards accounts do you need to connect to QuickBooks? You can connect pretty much any account that has the ability to be connected within QuickBooks. And I say that that's usually bank driven. If you use a small regional bank or some credit unions, they don't actually have the ability to check or to connect with QuickBooks. So if you find that you might be in one of those situations, you'll want to check on that. There is a way around that. However, you can, it's going to be a more manual process than that direct connection. So, will you accept customer payments through QuickBooks? Will this be credit cards, ACH, or another platform? So, this is where I was mentioning if you have that, even a POS system, so like a Square or a Stripe, or if you're going to go ahead and accept those directly through QuickBooks. We do have a question about starting a second business. Yes, technically, the answer is you would need to pay for a second subscription for QuickBooks, especially if they are separate entities that you do not want those finances to collide with each other. There are ways within the system to be able to sort the information. However, at the end of the day, I would say that requires a high level of organization and understanding of kind of how that sorting is happening. But there is a way to do it. But however, it's still going to be tied together in some of your reports. So depending on what your reporting requirements are and whether or not you're able to keep that information as separate as possible, you would need two separate subscriptions. There are some people that do this together, but I can tell you can be a full-time job sometimes in order to do that. So the chart of accounts and tracking, what kind of income streams do you need to track separately? So do you have different income that's happening that's distinctly different that you want to be able to see separated on your profit and loss. So, would this be different departments? Is it something like retail or wholesale, commercial or residential? Do you have products? Do you have services? These are different kind of income streams that you may want to see. I caution with this, and I will say this multiple times today, keep everything as simple as possible. The more layers that you have, the more opportunity for errors. If you were to connect something like Shopify, even Square, it's going to create its own income line anyways, because that's what the connectors do. So this might not even be a question that you're asking yourself here at the beginning. When you are setting up QuickBooks, it will give you a standard chart of accounts based on some of the questions you asked. It's probably going to have something like 5 to 7 income streams in there already, which is overkill. It's way too much. And I'll talk a lot more about the chart of accounts in a little bit and kind of my nitpickiness with QuickBooks and the way they handle that. What expense categories do you want visibility to from both budgeting and taxes? So when we talk about expenses, again, that's another one we can get really crazy with the way that we start to break things down. And it's really important to keep this as simple as possible as well. However, in your business, if you have something from a operating standpoint that you really do need to see separated out, then it would be important for you to have that expense category on there. So if it's something that you're passionate about, maybe it's something that you're tracking and at a higher level. I'll use the example of vehicle expenses for most businesses. We could lump vehicle expenses into one line, right? And just call it vehicle expenses. We don't have to break it out. However, I've worked in the landscaping profession before, and fuel is a really big deal when it comes to vehicles, as well as repair and maintenance, because these trucks are on the road every single day. And so, of course, we didn't just want to lump all of that into vehicle expenses. So we had a line item for fuel and a line item for repairs and maintenance. So the classes and locations that I'm talking about next, do I need these classes and locations? Actually, I just jumped over assets, loans, and owners distributions. So do I need to track assets? Do I have assets? We're going to go deep into what those are. Do I have loans? Do I have owners contributions distribution? So am I putting my own money in? Am I taking my own money out? Probably your answer with this is absolutely yes. And then do you need to classes or locations? So classes and locations are actually some of those sorting or the ability to run multiple things together at the same time. Technically, it was set up so that classes could be like departments and locations could be like physical locations. So maybe I have more than one location and I want to be able to look at just that location's income and expenses, or do I want to look at it departmental wise? I can pull reports based off of class and locations, so that helps me look at those as a business unit per se, as opposed to the company as a whole. But I would also be looking at the company as a whole. We have a question about chart of accounts and client with the personal expenses. How do we exclude those? You absolutely do not include them. It makes reconciling extremely different or difficult because, of course, you have those on your bank statement. So if there is a personal expense and first of all, don't do it. Second of all, if for some reason there's a personal expense on there, but this is a business account, it's called an owner's draw or an owner's pay in personal, because we have taken that money from the business and used it for personal. We're not going to call it our personal expense, or we're not going to not have it on there because otherwise we can't do our bank statement. But the assumption would be that any money running through there income wise has been for the business and isn't personal. We are going to go deep more into personal money and commingling here in just a moment. So maybe that'll make a little bit more sense. Employee contractors and payroll. Will I be running payroll in QuickBooks, or am I going to run it through another third party? So as I mentioned, QuickBooks does have its own payroll. It is a separate fee. Or am I going to be using something like ADP or Gusto or one of those many payroll options that are out there? How I'll be using the system is going to look a little bit different depending on whether or not I'm using QuickBooks Payroll or one of those connectors. Do I pay independent contractors? Do I have 1099 contractors that I need to designate within the system? QuickBooks is really nice in managing independent contractors or 1099s. It's literally just the click of a button, check of a box, I guess is the better way to put it, in order to differentiate what is just a vendor versus what's an independent contractor. And then I can pull a report at the end of the year. As long as I have that little box checked when I've entered that information, I can always go back and edit it and check it later if I forgot. But that report then will track that accurately. If I have W-2 employees, obviously I'm either going to be running QuickBooks Payroll or some other type of payroll, or am I going to have both? Sometimes we fall between both, right? Somewhere in between. And do you need to manage sales tax collection? So if you're a business that has the joy of collecting sales tax on behalf of the state, then QuickBooks is going to help you manage that as well. There's an entire sales tax management section that's not only going to help understand what was taxable versus non-taxable when you've got this set up correct, but also the tax amount that you've collected and then when you make a payment. So it's going to accurately put that sales tax into a liability account, and then when you make that payment, it's going to pay against that liability account. There's a lot of common mistakes that I've seen with sales tax, where we will put sales tax as actually income, which is not a good thing for us to do because we actually pay taxes on income, right? So we don't want to pay sales tax or tax on sales tax. That would be crazy. Now we're getting multiple taxes. Or we've actually called those payments an expense. So we've just got them in the wrong place on the chart of accounts, or we've categorized them incorrectly. Which is why we're going to go through what a lot of those terms mean so that we can try to avoid some of those mistakes or errors. Do I sell products, services, or both? So this is a little bit different in how you might handle these in the system. And if I sell those products, services, or both, which aren't listed here, am I invoicing my clients or am I using some kind of third-party system like Square, or do I have e-commerce such as Shopify? Do I need to track inventory such as quantities, cost, or cost of goods sold? Is that actually going to be something I'm doing in QuickBooks, or again, is that in another system like Square or Shopify? Will I create invoices, sales receipts, or estimates? If I'm not going to create invoices, sales receipts, or estimates for my customers, I'm not even going to need to worry about that part of the system or to learn and understand it because it's just features that I'm not even going to be using. What customer details, such as their industry, their product information, project, do I want to keep in QuickBooks? Again, if I'm not even entering that information in QuickBooks and I'm using a different system for that, then I'm not even going to be putting that level of detail in QuickBooks. However, if I am, I'm going to want to know that and so that I can do it. And what are my goals in reporting here? So what financial reports are most important to me? All of you will say profit and loss. It's the number one most utilized business report. Then you would say balance sheet. You may use cash flow. You may use job project profitability. You may use accounts receivable. These are all potential reports in there. And that's depending on what it is that you're doing within your business and how you're operating your business. You will have numerous reports that will provide you data. And this may be something over time as you use the system and learn to use these reports that you will then, you know, develop which reports are the most important to you. Where do business owners put service fees and credit card transactions that are charged to us for using that platform? We'll go in that to a little bit more. That's a question that's in the chat. But there is depending on whether you're using the connector or you're using a journal entry method or a sales receipt method, those are typically the three different ways that one of those platforms would be integrating into your system. And you would be pulling apart different pieces of information, one which would be those service fees. So the service fees are an expense. Or they're going to be cost of goods sold as a merchant fee, depending on how it is you're collecting those fees or how that fee is being charged to you, what exactly you're doing in that process. Do you need to prepare special reports for investors, lenders, and grants? You can customize reports within QuickBooks too. So if there's a very specific look that you need within your reports for someone specifically, you can do that as well. And then will you need to share access with a accountant or a bookkeeper? So every subscription has two or more, I guess is the way to put it. So it's simple start. You can have two accountant users in addition to the single user, which would be the business side user. In order for someone to be an accountant or a bookkeeper, they need to have the QuickBooks accountant version. Basically, you send them an invite via QuickBooks, and then your accountant can see everything within QuickBooks that you can see. And there's some other features that we have on our side as well in order to help us manage your finances. Setup success. So setting up correctly from the start avoids messy cleanup later. So think about your end goals from a reporting and tax filing standpoint, and then you're going to work your way backwards to structure your QuickBooks setup. So even though I keep saying setup, remember setup is really just a few little questions and then you're in the system. So a lot of those questions that I just went through, which I know were a ton of them, happen to be the way the system is going to look once you're inside it. So terms to know and different best practices here at the beginning. The basics with QuickBooks is there's just a couple workflows that you're going to need to know or understand. Again, I mentioned however you utilize these workflows depends on how your business is operating and what's a normal practice for you. But money in, money out, create reports. That's pretty much what it is. That's a really simplified version. But money in is, the money that the business is generating from all the activities that it may do. The money out is the money that is leaving the system. How is it leaving the system, and what is the appropriate place to utilize that or to categorize that? And then creating those reports at the end of the day, what information is on there. And it's important to state good data equals good reports. You could follow that QuickBooks checkout or setup that tells you to answer a few questions, connect your bank accounts right off the bat, and you might have data the second that you log into the system. However, that doesn't make it good data. So you're not exactly going to have good reports. The more comfortable and confident that you become with your chart of accounts and what the different types of money in are and what the different types of money out are, the better and better that your data is going to get. And keep it simple, right? I've said that a couple times. I cannot stress that enough. Keep it simple from the beginning, especially with your chart of accounts. I mentioned that QuickBooks is going to help you set up a chart of accounts, and it's going to be extremely complex, and it is going to be way more than any of you are ever going to want and need. I don't like that they do that to you. In fact, it involves a lot of cleanup right at the beginning in order to scale it back. So typically during the process of setup, I recommend do not connect your bank accounts, even though the system will try to force you to do it. One, your connecting account, it's going to walk you through an AI process that's going to help you, go ahead and start categorizing things. And you have not looked at your chart of accounts or assured that what you've put on your chart of accounts is exactly what needs to be there. So that's why I recommend that you do not connect your account then. And we're going to walk through the process of setting that up after we go through some of these terms. So I did mention the difference between bookkeeping and accounting and kind of what those mean, just so that you're more familiar with it. So bookkeeping is the process of recording daily transactions in a consistent way, and it's a key component to gathering financial information needed to run a successful business. So it's comprised of recording financial transactions, basically all of those money in, money out, preparing those financial statements, and sometimes it's completing payroll. Bookkeeping is done by business owners every single day, right? Or office personnel that we have, or we can hire a bookkeeper who specializes in this and does this maybe for multiple businesses. So this is those day-to-day transactions, everything that's happening, money in, money out. I keep using the term categorizing. Categorizing is going to become your best friend. You're also going to be start to do this second nature once you get more and more comfortable with what your chart of accounts looks like. Then we talk about accounting. So there's multiple layers of accounting, but accounting is also a high level process that uses financial data compiled by a bookkeeper or the business owner or internally by the business to produce financial models. So there are multiple types of accountants, and I like to mention this because I speak to frustrated business owners every single day. And it's often because they don't understand the relationship with the person that they're working with. So, whether that be a bookkeeper or an accountant, I'll hear over and over, I call my accountant all the time or I email them. I never hear back from them. I might hear from them once a year and all they want is my profit and loss, or they want to do my taxes. Well, that's because you don't understand maybe the relationship that you have with your accountant or the type of accountant that you have. So when I mentioned that, there's multiple types of accountants. There's financial, there's managerial, and there's tax accountants, as well as other layers. So knowing that accountant agreement. A tax accountant, you probably are only going to hear from them once a year. They're not going to provide you financial or managerial feedback. They're only going to collect the data that you provide them, and they're going to generate a tax return. If you have questions about how that information goes into the system, if you're properly categorizing something, if something's in the right account versus another account, then you're going to be talking to someone who's more on that financial or managerial timeline or world in the accounting. These are probably going to be people that you're paying monthly or a subscription or maybe even by the hour. So knowing what type of agreement or who you're working with is going to help you with a lot of frustrations in the future. So accounting is comprised of preparing adjusting entries and journal entries, reviewing company financial statements, analyzing the cost of the operations, completing income tax returns. So these are tax accountants, and then aiding the business owner in understanding the impact of the financial decisions that they're making. So accounting definitely goes well beyond taxes, as long as you're talking to the right accountant. We have another question, and it looks like the question is probably going to get answered when I start to go through the different types of terms that we're going to know here. So Shakita, I'm going to hold off on that one for the moment. And if I don't get that answered for you, then we'll circle back to it. So 5 things that you should know in all of this stuff that I'm saying today. If you take nothing away from this entire webinar or conversation, take these 5, because regardless of what financial system that you utilize, software that you utilize, these 5 will apply. And once you know these inside and out, can say them in your sleep like me, then you will be able to manage your finances at a level that is well beyond where you probably are today. So the 5 are assets, liabilities, equity, income, and expenses. So Shakita, the question there is probably going to fall in one of these 5, is why I said that. So assets, these are things that you own and they have a value. Liabilities, these are things that you owe and they have a value. Equity is the value of the business to the owner. If you notice in these top 3, I use the word value in all 3 of them, and we'll talk about that in a little bit. Income is the money in that the business receives in exchange for providing labor, producing goods or services, or investing capital. So this is sales or money that we're receiving for those investments that we do. Expenses. There are 2 different types of expenses that we're going to dive into. So we like to break those down. And those are direct expenses or cost of goods sold. It's a simultaneous name depending on whoever you're talking to, as well as indirect expenses, also called overhead or sometimes administrative costs. So you'll hear indirect, overhead, administrative all simultaneously as well. And we're going to go into these one by one much deeper. So when I talk about the 5 things that you need to know, the top one or the first one, and the reason that it's listed first is that when you log into QuickBooks for the very first time and you go into your chart of accounts, and remember I said they've already put one in there for you, assets will be at the top. And as you scroll down through your chart of accounts, they're going to be assets, liabilities, equity, income, and expenses. You're going to spend a lot of time scrolling through these. So knowing the order that you will find them in is helpful in saving time with your scrolling. So assets, they are things that you own and they have a value. Remember, that was the short version of it. Assets are everything the business owns that has a value and that can be used to generate income. So I'm going to add that little part on there because when it comes to funding or to getting loans or things like that, your assets matter, obviously, in that approval process. Because they want to know if at the end of the day, after you've paid off all your liabilities, are you able to pay off all your liabilities with the things that the business owns? So these are things that can be converted to cash quite easily. So we've got current assets. So these are expected to be used or converted to cash in the next 12 months. So these are anything like your bank accounts, right? So we've got checking accounts, we've got savings accounts. There's an obvious value of money in there. Accounts receivable is the term or the account that you will see in your chart of accounts. If you invoice clients, and it is accounts receivable is kind of where that value sits until you've collected that money. So we've invoiced them. They're not going to pay us till a later date. So we've got what's called an accounts receivable out there. Banks look at this because that means that's a collectible amount of money, right? So as we move forward with our business, it's important to keep our accounts receivable accurate because we want to make sure, are we truly going to be able to collect that money? We know sometimes in the world of invoicing and being a business owner, we get to chase money all day long. That's one of the things they don't really tell you when you're starting a business, is that you're out there chasing money, but some of that is ultimately going to be uncollectible. And we want to make sure that we don't have that uncollectible sitting there in our accounts receivable because that makes it a not accurate number. Inventory, if you hold inventory or you have inventory, that has a value to it. So that's going to be considered a current asset. What is the value of that inventory for this 12-month period? Prepaid expenses, some of you may do this, some of you may not, but if we've prepaid for something and we haven't actually utilized it yet, or we haven't actually received it yet, or something like that, then that's still considered an asset because it's not actually an expense yet until we physically have completed that transaction. Fixed assets, these are long-term items. They're not quickly converted to cash, but they do have a value to them. So this is if we have equipment, we have vehicles, we have furniture, if we do leasehold improvements type things. So we're spending a large sum of money on something and it's not going to be considered an expense because over time that value is going to get what's called depreciated out. And the depreciation is actually the expense that we're going to see show up on our tax returns or on something like our profit and loss. As opposed to saying we buy a $30,000 piece of equipment, we're not going to show that $30,000 expense directly on our profit and loss. We're going to call that an asset. Other assets, these could be security deposits, long-term investments, intangible assets, if you have a patent, goodwill, things like that. Those aren't things that we can see and touch and feel, but they do have a value to it. Our other type of asset that we may run into is going to be the checks and the cash from our invoices or our sales receipts, and we're holding on to it, and then we go deposit it in the bank in a lump sum. So it's sitting in undeposited funds until we create a bank deposit and we actually put that in the bank. This is one of those accounts that gets used incorrectly a lot, especially when we're doing reconciliations for the first time. We might we might discover that we've not used it correctly because some of our deposits might not be in there or missing, or we've got individual checks deposited when really we collected them. and put three checks in the bank at the same time. So learning to use that account if you're in that situation is key to success. However, if you're using just purely credit cards or something like Square or another type of system, and you're not dealing in cash or checks at all, then you're probably never going to use undeposited funds, and it's just going to be an account that's going to be dormant. Liabilities. So, what are liabilities? Liabilities are debts or obligations that the business owes to others. So, typically, this is from borrowing money or delaying payment for goods or services. It also includes withholdings such as sales tax, different payroll liabilities or fees. So, we'll see those all listed in liabilities. This is key to understanding sales tax, whether you're collecting it and paying it, and also how your payroll is being managed. So you may not, if you're using a third-party payroll system, you probably are never going to use the payroll liabilities because often with those third-party systems, they withdraw the chunk of money at the time that you're running the payroll. So they're going to withdraw the wages, they're going to withdraw what the taxes are, and they're going to withdraw a fee. There's usually three charges involved with that. So you're never actually going to have a liability that's that holding account that you were then later paid to the federal government or the state or whomever it may be. The third party payroll that you've have an agreement with or that you're utilizing is the one that's handling that, but they've withdrawn the money from you in the beginning. So that is one benefit to those third parties. You don't have to deal with the liabilities. However, if you're using QuickBooks payroll, you will see the liabilities. This would all be run through the payroll system. And then when you pay it, it would pay against the liabilities. So it's not something that you're physically doing, it's within QuickBooks payroll as well. If you're not using any of those payroll systems and you're awesome at payroll and you know what to do with liabilities and all of that, then you might be doing that manually. Um, so current liabilities, just like current assets, this is something that's happening within the next 12 months. So these would be debts that are due within 12 months. Accounts payable. So like I mentioned, accounts receivable, we've invoiced someone and we're just waiting for them to pay us. As that's when accounts receivables is kind of like that clock. Accounts payable is the liability side of things then. So we've received a bill, we've put a bill in the system, but we haven't paid it yet because it's not due. So this could be from various vendors. Utilities is one that a lot of people understand. We receive our power bill, but we don't owe it for 28 days. So we've got our power bill in there and the clock is just ticking. So that value of what we owe is what is accounts payable. Credit cards are liabilities, sales taxes, I mentioned payroll, and then other short-term loans. As far as loans are concerned, most small businesses don't differentiate these between current as well as long-term because that's just another entry point. A lot of you will just call a business loan a long-term loan just to simplify your lives if you're maintaining your own books. These are debts that are due in more than 12 months. So certainly if it's a large fee that you're paying over a multi-year, you're not going to want to say that's due in 12 months. You're just going to put that out there in the longer one. So these are business loans, vehicle notes, mortgages, those types of things that have those extended period of payback. Other liabilities that you might see in here are security deposits, deferred revenue, loans from shareholders. Sometimes you guys do awesome enough with your business that you can that you are actually not awesome enough, but as the business owner, you're loaning the business money that you expect to be paid back. So that's a loan from the shareholder you want to be paid back. Or if you have loans from individual family or friends or whatever, and you want to put those on your balance sheet to indicate that the business is expected to pay that back at some point. Equity. What is equity? So equity is a confusing one. It also can be your best friend, especially if you're that sole proprietor partnership LLC. It represents the owner's interest in the business after the liabilities are subtracted from the assets. So we've got assets, we subtract the liabilities, and then we have equity left over. So it's the net worth of the business, and it reflects the contributions, profits, and distributions. The reason that I say it can be your best friend if you are that sole proprietor partnership, this is often how we pay ourselves. It's also how we invest money in our own business. So when we start talking about what do we do with personal expenses, what do we do with personal money, at the beginning of our businesses, we're investing a lot of our own money in this business, and we should be accounting for that because obviously at the end of the day, that's also an expense on the business side. So, how does that money get in the system? Because it's not income, right? So we call that owner's equity. And you'll notice two different lines in your chart of accounts in equity, probably called owner's investment and owner's pay and personal or owner's draw, one of the two. They typically have owner in front of them, right? If you are a sole proprietor, that's what they'll look like. If you are a partnership, then you'll have partner investments and partner contributions, or partner contributions and partner distributions are the two. So these are offsetting accounts, right? One of them is money coming in, we're investing or we're contributing, and the other is money going out. So we're either distributing or we're paying personal or we're drawing. And so an important thing in equity, at least when we start to look at this, and we'll talk about it again, is that the business does not care what the owner does with the money when they withdraw it. So we don't need to define it. And this is another thing that I go rounds with QuickBooks sometimes is that even in that basic chart of accounts setup that they will give you, they will actually list accounts in equity that say personal in front of them. And that is a huge no-no from a financial standpoint. Yes, it may make it simpler for you because then you won't have to write down or keep a separate spreadsheet to say whether or not it went to healthcare or it went to pay your taxes or whatever it may be. At the end of the day, remember, the business does not care what you do with the money, and the business has to stop at one point, and you, as the personal person, has to start. And it is important to approach all personal money coming in, money going out at that point. Create that defined breaking point. It's important from your liability. Even with having an LLC, it's not going to fully absolve you of all liability, especially if you have money going like this. That is a place you do not want to be. So if you are now, okay, just work towards getting to the point where you keep the business one way and personal the other way. So we'll talk about what it looks like more with money coming in and money going out and how you're going to call those on a slide just a little bit further because I know there'll be a lot of questions there. So retained earnings is the only equity account that you will see that does not have an actual value in QuickBooks. And the reason being is that it is the cumulative profits or losses of the business over time. So we tend to be losing money for a lot of years as a small business. And so we're going to have a negative retained earnings, right? But over time, we're going to start gaining profits and we're going to see that retained earnings change. And obviously over time, retained earnings should be positive, and it should continue to grow. This could also be where there's, these are more S Corp, C Corp type things down here below these last three. So we're talking about stock, we're talking about additional paid in capital. These are shareholder contributions, as well as distribution or dividends. So these are shareholder contributions, shareholder distributions. So these are kind of similar to what I was saying with the owners investments and owners pay in personal. However, that's more of an S Corp thing. C Corps, you cannot do any of these. So these are more stock on the C Corp side. So it's important to understand the type of company that you are and what you can and cannot do within equity. I assume that most of you are probably an LLC, either sole proprietor or partnership LLC. So most of the things that I'm talking about with the owner's equity will apply to you. So here I am talking about keep business, business, and personal, personal. You can tell how important it is. The term for this is called commingling. Commingling is mixing personal and business funds in a way that it violates accounting and tax best practices. Like I said, this opens you up to liability. I'm actually based in the state of Ohio. We tend to be a lot more litigious than I think you are in South Carolina. But people like to sue people for a various number of reasons. And if you can keep yourself safer in the long run from liability, then obviously don't commingle that money, personal or business. So things that would be considered commingling would be using a personal card to pay for business without tracking it. Now, that's not really commingling, that's just bad business. But I'll talk about how you can overcome that. Paying a personal expense from a business account. This is a big one. A lot of business owners will do this. You can do this. There is just a certain way that you need to make sure that you categorize and utilize those equity items like I talked about. Also, treating business funds like it's a personal ATM, paying your friends, paying your family, paying your bills, paying your expenses. Bad move. You don't want to do that. So best practices for the different entity types. So single member LLC, an owner's draw via equity account. So I need to pay my car payment. I don't have the money in my personal account. My business account has that. I don't just directly pay for my car payment. What I do is I give myself an owner's draw. Give myself an owner's draw on the amount that I need to pay, which means I transfer it into my personal account. I call it an owner's draw in my QuickBooks, and then I go pay my car payment with my personal account. Maybe I used my personal credit card and I bought various supplies and items from my personal account. It might have been on accident. That stuff happens. Use the wrong credit card. But now I want to make sure that the business actually gets that expense and also I get paid back for it. So how do I handle that? I don't just use the business account and pay my credit card because then that looks like I'm just commingling funds. And also, the business didn't actually get the credit for the expense on the supplies that I purchased. Instead, what I do is I look at my personal credit card statement and I add up everything that I might have bought for the business. And I decide then what are those categories. Maybe it was supplies and materials that's supposed to be cost of goods sold, and maybe I bought some office supplies. So I look up that total value, and whatever that total value is, then I call that an owner's investment. That's how that money comes in. And then when it's an owner's investment, it went out into those two different accounts. So what was the value of the amount that I spent on cost of goods sold? And what was the value of the amount that I then also spent on office supplies? And those things will all equal each other out. They will balance each other, right? That will be the same total. So that might answer your question there, Andre. That if you had personal or outside money, if you want to add it into your business account, it's an owner's investment. Instead of it's being split into two expenses, like I said, it's being deposited directly into that bank account. So if I've transferred money from my personal account to my business account, when I'm looking at it from QuickBooks standpoint, I call that an owner's investment. I don't call that income or sales. So that's business, and personal. Um, now that we've talked about assets, liabilities, and equity, these three of those five main accounts that I've been talking about make up the second most utilized business report, which is called the balance sheet. So the balance sheet is all of those assets, liabilities, and equity within the report. And so this report tells us what we own and what we owe at a single point in time. So if I pulled that balance sheet for today, it's going to tell me all of those values for a single point in time. And this is, over the history of the company pretty much. So if I've got these values wrong in QuickBooks, if I let my accounts receivable add up, if I let my liabilities lapse and add up, if I'm not using those correctly, then this report is not going to state the correct values, right? So it's very important to review it and to understand the information that's on it. The balance sheet actually has an equation. If you like math, it is your assets equal liabilities plus equity. You can change this equation around however you seem fit. It will always balance itself though. And that's why it's called the balance sheet. So our assets, again, are cash. These are our bank accounts, our machinery, our land, things that we own and have a value, right? And then liabilities are our debts, our accounts payable, our taxes payable. These are things that we owe and they have a value. And then we've got our equity, which is paid in capital, our owner's investments, our owner's draws, and our retained earnings. This is the value of the company to the owner. Um, a balance sheet is great. Banks are going to ask for it all day long. They're going to run tons of ratios off of it. What they're trying to do is they're going to determine your financial health. It's going to help you obtain loans if your balance sheet is, obviously good from their perspective with those ratios. It's also going to help value your company if you need to. And then it also, you can monitor those different changes over time. Obviously, no report captures everything. This doesn't talk about how wonderful your brand is or your amazing employees or things like that. So there is another story that you may have to tell when it comes to loan time. However, your balance sheet is really going to say whether or not your company is healthy or not. Next of the five, this is number four, is income. So what is income? Income, also called revenues or sales, that's money that you've earned by the business through regular operations. This could be sales of products, service income. These are terms that you'll see in QuickBooks, sales of product and service. Other income as well as unearned income. These are the type of incomes that are going to fall under there. Other income is important to note because if it's not sales or revenue from retail sales or sales of products or sales of service, then it is other income, and that will show up differently on your profit and loss report. So other income would be things like interest that you may have earned, so interest bearing accounts, rebates or refunds, so refunds from customers as well as rebates from those credit cards, which are pretty popular when we're business owners to get money back. These are going to be other income. Also, if you've received grants or things of that nature, this might be considered other income when you put them in there. So how do you account for money that's come into the business, right? It's not a liability that we may not have to pay back. Other income got really popular when the whole PPP situation was happening with COVID. So those funds were being accounted for under other income line to show that we had received them. And then we have expenses. So remember when I mentioned before, there are two distinct types of expenses that you're going to want to become very familiar with. And the first one being direct or cost of goods sold. Cost of goods sold is a friend of yours. You are going to want to use it, but you want to make sure that you're using it correctly. So a cost of goods sold, and this is something you're going to ask yourself this question every time you look at an expense. If you worked with me one-on-one, I'm going to ask you that too. Did it directly influence the outcome of the sale is usually how I put it. Meaning, was it money that got spent or cost that you incurred by the business directly resulting in that revenue? An easy one to look at is, did I buy something and resell it? That's the easy one, right? But there's so many more things that go into often generating revenue that it's not quite as black and white as, did I buy something and resell it? Supplies and materials are often there depending on whatever the type of company that we have. Were we making things? Did we perform a project that required us to buy certain things to put on the project that then we, that generated the revenue? Were there certain deliveries that we could potentially call a cost of goods sold? This is the shipping part of things is becoming more and more, especially with things like Shopify, right? Because there's a shipping income as well as a shipping cost that's involved. And so if we're getting shipping income, we're also getting shipping cost, and it's usually that cost of goods sold that's offsetting all of that. Labor to produce that outcome. So if someone is literally generating the product that you're selling, that's often considered a cost of goods sold. I mentioned landscaping before. So any of the crews that are actually on the job site performing the work, they are labor that's a cost of goods sold. Someone sitting in the office, that's not cost of goods sold, right? They're doing administrative functions in the background. Merchant fees. Someone had asked about merchant fees prior. Merchant fees can be considered a cost of goods sold. This is becoming more and more popular because we're now in a digital world. because we would not have those fees unless we were selling something. So that's the only way those fees happen. And this can be accountant dependent or tax accountant dependent. They may tell you to put them as cost of goods sold. They may tell you to put them as an indirect expense. So certainly you can ask that question. Equipment rental required to produce the outcome. So again, back to my landscaping world, if I had to have a machine in particular to work on a particular project, that was an equipment rental that I had to use for that project specifically. If I'm renting a piece of machine, renting a copy machine or computers even or something like that, that's not cost of goods sold, right? That's just general business expenses that would then be called indirect. So this is money outspent or costs incurred just by the business in our effort to generate those revenues. So yes, we wouldn't have had those expenses unless we were trying to make money, but they indirectly influence the outcome. Common things for this might be advertising, office supplies, rent, utilities, professional fees. So like if we had to pay an attorney or a consultant or an accountant, travel charges that we may have on behalf of the business, auto expenses, bank charges. The indirect expenses actually happen to be the longest list usually that we have within our business. And unfortunately, they're the ones that don't directly influence the outcome, right? So this income and expenses together, when we look at these in a report, it is the number one most utilized business report, and it's called the profit and loss. It might also be called the income statement. It might be called the revenue statement. You might have heard those terms as well. Shortened, we call it the P&L. It is one of those top reports that you'll see in QuickBooks as a favorite automatically along with the balance sheet. What it is it's the company's income and expenses over a period of time. So previously I mentioned the balance sheet is at a given point in time, meaning it takes into account everything that happened prior to it. The profit and loss, however, you're going to pull for a period of time. Some business owners may look at this daily. We may only want to see what happened today or the day prior. When I was managing finances for a mid-sized business, even small to mid-sized business, I would say, because I was responsible for the financial team within the business, I would look at this report multiple times a day because I was being asked what was happening within the business. So I needed to know where the money was moving throughout the day. It could be a week, it could be the year to date, it could be the month prior. And when you pull or generate this report is really going to be dependent on what it is that you're doing at that given moment in time and the actual data that you need to be looking at. So what does it include? It includes the revenue, also known as sales, also known as income, minus expenses. This is where you get your net income or your profit. Everybody always says, I get confused by profit or income. I hear that a lot. Income is 100% of the sales generated, right? We call that top line. And the reason we call that top line is it's at the very top of the report. If for some reason your income's not at the very top of this report, you might have it in the wrong account type. That's why knowing these five is extremely important. Assets, liabilities, equity, income, expenses. Bottom line, if you've heard that phrase, so we've got top line, which is 100% of our income generated. Bottom line is our profit. And the reason it's called bottom is it's the very last line on the report. And we call it either a profit or a loss because it's either positive or negative, right? Profit is positive, loss is negative. Why it's important, we need to know we're making money, for one. We can tell what our most successful products or income streams are. So when I talked at the very beginning about the questions that you're going to want to ask yourself, it was what kind of income streams do you want to know? So retail, wholesale, residential, commercial, these are very popular differentiations because we want to know how much money we're making in each of those income streams. This doesn't mean that we're going to list every product individually. That is a big mistake. You're not going to want to see that level of detail, definitely on your profit and loss. You're not going to want to see that. There are other ways to define that. Changes in expenses. So if we're doing a comparison, maybe a month-to-month comparison or year-to-date comparison, or even prior year to current year comparisons of our P&L, we're going to be able to see those changes in expenses in those different accounts. And this way, we'll also be able to make a better informed decision if something is a good investment. Maybe we want to add another product line. Maybe we're in residential and we want to do wholesale or commercial. Maybe we're in wholesale and we're thinking about going retail. So we're going to be able to look at what the income potential is for that, as well as our expense potential for both of those, and really make those decisions. So getting to know your chart of accounts. I've talked about the chart of accounts several times. I've talked about the types of accounts, those 5 that you need to know, that truly make up the chart of accounts. So really, what in the world is this chart of accounts that I keep referring to? Number one thing about the chart of accounts before you've ever looked at it or understand it, keep it simple, right? Keep it as simple as possible. Do not overcomplicate your life. Running a business is hard enough. Your chart of accounts is a list of all assets, liabilities, equity, income, and expense accounts for your company. You can see how your chart of accounts can be very large if you have a lot of them, or it can be very small. I invite you to get as small as possible, but still to provide the level of detail that you need to effectively manage your business. The smaller that you start at the beginning, the better. You will make decisions as you move along and you start to categorize transactions on whether or not you need to add in certain accounts, whether or not they're going to be important. As I mentioned before, QuickBooks will give you a basic chart of accounts, which is way more than basic. And we'll walk through a little bit of how to scale that back before you connect your bank account and start to categorize things. An account, look at it this way, is a bucket. It's where you're going to put a transaction through a process that's called categorizing. So we're going to look at something and we're going to say, that was a cost of goods sold for supplies and materials, put it in that bucket. That was sales and it was for retail sales. We're going to put it in that bucket. Do not include any personal accounts or personal transactions in any of this, right? If it is money coming in, money going out that happen to be personal money, we're going to put it into equity. We're going to call it owner's investments or owner's draws. And then we're going to work as hard as we can to get away from doing that. However, the business, as I mentioned before, will pay certain personal expenses for the owner because that's a privilege of being the owner. But if the business does that, we just want to make sure we call that owner's paying personal, and we don't classify or call it anything further in categorizing other than it was an owner's paying personal. Even though QuickBooks is going to provide us the opportunity to do that, we're going to want to take those out. We should not have that on our profit and loss. Remember, at the end of the day, you might be giving this to someone who's potentially going to be giving you a loan or to an investor. So look at it from that standpoint. It's not just about you managing the business, it's also who is looking at these reports. The more accounts that you have, the more opportunity you have for error, either now or even in the future. So it is all of our goals, most likely, as business owners, to not actually do this ourselves in the long run. We might want to learn how to do it, not might. We should learn how to do it because we might have to manage someone or oversee someone who's doing it in the future. It's really good business practice to have a high level understanding of it so we can know how these reports get generated. So that way we can recognize problems and understand how to fix those in the future. However, more accounts is more opportunity for error. We are an extremely creative people, right? And so what I perceive something to be, the next person might call it something else, which seems a little odd because you would think that numbers are more black and white than they are. But when you really start to dive into your chart of accounts, you can see can be some vagueness in there. Perfect example of this is if you let QuickBooks set up your account or your chart of accounts, typically it will say advertising. And then under advertising, it will give you 3 or more sub accounts. And those sub accounts may say social media, ad fees, website fees. So all three of those sub accounts are all advertising, right? And if our business doesn't really need to know what we're spending on social media or what we're spending on websites in comparison to advertising as a whole, so you might not be that type of business. It's probably not even that significant of an expense and advertising as a whole. Although you may be extremely diligent in separating everything out into those sub accounts, and you may hire a bookkeeper, accountant, someone internally, and they're just going to call it advertising because at the end of the day, for tax purposes, that's what it is. So remember, less is more. If you do need to see something separated out, then you're going to want to diligently train someone to ensure that they are doing it in the exact same method that you would be. Otherwise, no, it could get pretty vague. Another one that's going to happen within the chart of accounts is you're probably going to see supplies and materials listed in there 3 different times. Knowing where and when to use each of those supplies and materials is important because they're all in very different spots. One, supplies and materials is going to be under cost of goods sold. Today, you've learned those are direct costs that are directly influencing the outcome of those revenues. So we want to make sure that we've properly categorized that supplies and materials. We're probably also going to have a supplies and materials that's going to be floating around there in outer space. I call that because it's just in direct somewhere. There's another one that's probably going to fall under office supplies or general business expenses, right? Depending on your business, you may only need the one in cost of goods sold and maybe the one in general business expense, and you may not need the third one. QuickBooks sets them up that way because some businesses really do need to separate them out in 3 different ways. I can use a food truck or a multi-entity business as an example of this because I've seen it. We've got our supplies and materials, which happens to be our food or our, carry out containers that they're purchasing. That's a cost of goods sold. They've also got supplies and materials for inside the food truck itself. So they've got those supplies and materials that happen to be indirect. And then they've got a third supplies and materials that might be in an office somewhere or maybe their commercial kitchen that they're utilizing. So there are really 3 different places that they need to know where they're spending those supplies and materials. However, if your business doesn't need 3, it's one of those things that I'm going to show you here in just a minute, how to inactivate them and to get rid of them. Don't overcomplicate it though, is my point. If you've never looked at a chart of accounts before, and I am speaking to you for the first time, and you have no idea where to even start to understand what you need, what you don't need, what you should have, what you shouldn't have, the Schedule C that you can get from irs.gov, so if you just Google a Schedule C from irs.gov, there's going to be a blank one there, is really good for inspiration. It is a list of income and expense accounts that you actually end up utilizing when you pay your taxes. So if you're a sole proprietor partnership LLC, Schedule C is the form that actually gets included into your personal tax return that accounts for all of your business income and expense. And it's going to show you a very small grouping, I guess you could say, of expenses. And I always forget the number. It's somewhere like 27, 29 expense accounts as opposed to maybe 75 or more that you're going to see when you're in QuickBooks. So it's a good comparator to look at and say, okay, that one I definitely probably am going to end up needing because it's on a Schedule C versus maybe the 6 different ways that QuickBooks has broken it down, right, in my chart of accounts. So when you're going through that process of simplifying things, you can utilize that as inspiration. If I were to ask QuickBooks, is it easy to get started? I mentioned this before. It absolutely is easy to get started. It only takes about 5 minutes to get up and running once you've synced your bank and credit card transactions in QuickBooks. Again, it's telling you to go ahead and sync those bank accounts and credit cards. As I mentioned before, I caution doing that from the very beginning. You are going to want to back that up just a little bit and follow that process a little bit different till your chart of accounts is where you want it to be. So if I have now chosen that I want to purchase my QuickBooks Simple Start, I then get this question. So your business is important to us. Help us know it better. What's your legal business name? Simple. We could all answer that, right? Industry. What industry are we in? Choosing this industry is going to help develop that basic chart of accounts that QuickBooks is going to help to go ahead and start with. Not every industry is going to be in here, but you will have to choose the industry that's as closely related to you as possible. What would you like to do in QuickBooks? Keep these answers to these questions simple. Our goal here is to get through this setup menu, get into the system, and go to our chart of accounts. That's 100% what our goal is when we're setting it up. So what would we like to do? Most people say organize our expenses here because everybody's going to organize their expenses at the end of the day. Then we can say finish now. We don't need to check all of these, especially if we're not going to be doing them. If you're sending and tracking invoices, feel free to pick that one instead of organize expenses. Once you get into the next series of questions, skip for now whenever possible. It will be an option that it gives you. Ironically, the less that you do in the system on the front end, the easier it's going to be for you in the back end, especially with the pop-ups that you're going to receive and the things that they're going to try to sell you. So say skip for now. You will get to the screen that will tell you you have two options. You will either be connecting your bank account or invoicing a client. Now, remember, if you're not invoicing a client ever, then you're never even going to want to go into that one and set that up. If you do want to invoice clients, by all means, go ahead and do that one because it will help you customize the invoice and do that right at the beginning. However, with the setting up the bank account, you can go ahead and instead of connecting it, you can ask it to learn more, and then you will have the option to skip for now. So you can go ahead and skip that. The reason I say that, remember, is that it's not just connecting your bank account. It is going to walk you through a whole AI process that is going to start categorizing things to your chart of accounts before you've ever even gone in there, reviewed it, looked at it, cleaned up, decided exactly if your chart of accounts is the way that it's going to be. And ultimately, it may end up putting things in accounts that you ultimately didn't want. You will go through that process again. Don't worry. You can get back to that after you've already been in there and you've gotten your chart of accounts set. So we're going to want to review our chart of accounts. Once we've done the skip for now and the system's going to set everything up for us, then only a couple minutes later, it's going to drop us into the dashboard. If you've not seen the new dashboard or the new user interface, you are looking at it right now. All of they call them apps now instead of the menu, are across the top. If you like the look and feel of having them on the left, oh my goodness, I just jumped past it. You can come down here to My Apps and you can actually pin those menu items down to the left as well. On the left, you'll notice you've got a menu option. You've got the dashboard that we're in. There is a feed. So the feed is going to tell you all different kinds of tasks. This is kind of an AI integrated thing. Not kind of, it is. To give you the feed of things that are coming up and what's happening. Then your reports are right there on your left-hand side. So the reports are easy to get to. In these apps, accounting, expense and pay bills, sales and getting paid across the top, you'll see those things. This is where you're going to find multiple menu items that are within it. Most of you are going to be working in accounting predominantly. Accounting predominantly is where it's everything to do with the money in, the money out that we talked about. It's also where you're going to find your chart of accounts. So when you get dropped into the dashboard, go straight to accounting and go to your chart of accounts and start working through it there. I am going to point out a couple other things here on the dashboard before I jump into what it looks like as far as cleaning up your chart of accounts. So there are icons across the top. This is where you can access certain features within QuickBooks as well as connect with QuickBooks people, your accountant and so forth. You can see different tasks that you have there, different apps that you can connect. This is one of those places that you'll click. Any notifications as far as billing issues, connection issues is going to be here. But my favorite that I talk about a lot is called the big gear, and it's in the upper right-hand corner. This is the settings or gear icon up there. If you need to do anything with accounts and settings, which you will need to do at some point, remember how I said it's going to default to the accrual accounting. If you want to change to cash, you're going to have to go into this big gear and you're going to have to do it. It is not one of those questions that asks you during setup. If you need to update your business information, if you want to put your logo on here, the gear setting is where you do all of that. QuickBooks payments. So if you're accepting credit cards and things like that, all of the setup information is in there as well. If you have billing issues, you want to upgrade your subscription, downgrade, change your credit card, all of that is in the big gear. It's a very important menu up there. So it's very high level overall, the entire system. This is also where you find the help menu. It's that circle with that little question mark. So you can access different articles, different support. You can connect with QuickBooks directly through here and get different information. And then you've got what is the blue C, which is the C for Christy. That's my initial. This is how you get to your Intuit account. So this is the overall account where you can update your password for QuickBooks itself. This is the administrative level of things. So your password is actually an Intuit login. If you want to go to your TurboTax account or your MailChimp account or those other Intuit owned things, you can get there through your blue C menu up there in the top. This is what the big gear looks like when you click into it. So it shows you all the different menus that you can find in there. A lot of clients will actually use this to get to the chart of accounts and also for reconciling, because these are both menus that you can find in there. A chart of accounts and reconciling is obviously high level business type things, and you can get there through the big gear. So I mentioned understanding the chart of accounts and cleaning it up. So QuickBooks created me a chart of accounts, and then I went, whoa, this is way more than I needed. So you can see in this basic chart of accounts, we actually happen to be near the end of it because I can see expenses and other income here. We've got 76 to 80. It looks like we've got 80 different accounts in here. That is a lot, especially for starting out. And so we can condense that down to a significantly smaller amount. It's definitely going to give you things and assets like buildings and land and property, and you might not have any of that. And so those are just extra accounts that I'm saying that you don't really need and that are important to clean up, as well as any of those sub accounts. So the overall look and feel of the chart of accounts, as well as many different screens that you'll be in QuickBooks, it looks kind of like a spreadsheet, right? So this looks very much like a spreadsheet. All of these headings across the top are filterable. So if I were to click on any of them, it's actually going to change the order of the spreadsheet. So it's kind of like a data filter in a way. In your chart of accounts, though, I recommend that you do not filter it. And if you do, the account type is really what you want to maintain. And if you remember the order that I talked about with assets, liabilities, equity, income, expenses, if you were to filter by something else like the name, those are all going to get jumbled up all over the place. Yes, it may be alphabetical. However, it's not by account type. And therefore, if I start to think in blocks of what is an asset, what is a liability, what is equity, income, and expenses, then I can go find them because they will be alphabetical within those blocks of those account types. I can also filter by a name or number or something like that. This little menu that I've got going on over here. So if we go over to the right, when I talk about cleaning things up, that little menu or that little drop down is a very important over here to the right. So I have the option of editing it. I can edit the name of it. So maybe I don't like vehicle expenses and I want to call it auto expenses, potato, potato, but for you, it might matter. I can actually edit that name and change it to auto expenses if I'd rather see it that way. But this guy right here, this make inactive, that's what I mean by cleaning it up. So when I said keep it simple, look at your Schedule C, and you might be panicking because this is the first time you've ever looked at it and you're not sure what to do. This is where I can say, don't worry, you cannot make a mistake. Even though you might not be comfortable and confident in whether or not you should clear something out of your chart of accounts or not, you're not deleting anything. The only thing you're doing is inactivating it. And if you don't need it today, but a year down the road or 10 years down the road, whatever it may be, you might actually need this account based on whatever your business does, you can bring it back. You won't have to add a new account in the future. You can just go into your inactive list and reactivate something with the click of a button. And that's very easy to do by clicking the little gear. So this is little gear, big gear was all the way up on the top. I click little gear and there's a little checkbox that lets me include those inactives and I can bring them all right back. So even if I'm going through this process and I make something inactive and I go, oh shoot, I didn't mean to do that. I can just go up to little gear, check that little box and bring them right back by making them active again. So I can really get in here and start to shrink down this list considerably. So once I've gone through that chart of accounts and I've done the whole process of looking at all my assets, liabilities, equity, income, expenses, I decided, okay, this is a pretty good list, or at least I feel like it might be a pretty good list, right? Then I can link my bank account at that point. Under bank transactions, which is also still under accounting, you can see under my apps, I'm in accounting, and then bank transactions. This is where I'm going to find that ability to link a bank account. So it's not going to look like this initially when I go in there. It's going to ask me if I want to get started. It's also going to show me a little video on how to do it. So I get to watch the little video. They're typically 2 to 5 minutes, maybe max in QuickBooks. I do recommend you watch their videos because they are really quick and to the point, exactly what you need to know. You can also go back to those videos at any time. If you are in the big gear in this menu, these little video tutorials list is right here. And all of those little videos that I'm talking about, because you will only see them one time and it's the first time that you go in there. Otherwise, then it's like, where do those video tutorials go? So it's in the big gear, which is right up here at the top. You can see it right here as well. Once you open that menu, those video tutorials are there. So in order to link a bank account, you're just going to click that button to say get started. It's going to then give you a search box as well as another box. And you're going to see a bunch of banks. And so you're just going to type your bank in there. Once you've typed your bank in there, it's going to then take you to enter your online banking user login and password. It's probably going to ask you at some point for verification. Your bank may ask you for verification, depending on who your bank is. It might ask you for an extra level. You might have to then confirm something, right? The big banks, and I will say that the big banks are generally pretty easy to connect because they've got the security levels that maybe other banks may have even higher security levels. With these bank links, though, once they are linked, you will find that you have to log into them often, and that is bank dependent. That is a security thing. Some banks will break these links all the time and force you to log in again. You can tell whether or not something is updated in your accounts just by looking here. So if I look at this date right here, this is telling me that the last time that this linked was 8/8/2025. So as we sit here today, that was a little while back. So I need to then update my accounts and pull in the rest of that information. So right now, what I'm looking at though is a live bank feed. So this one in particular has their checking account and their savings account connected. So with that, everything that I see below this is part of the live bank feed, and it is not actually in QuickBooks yet. I then have to do the process that I've referred to a couple times as categorizing and then post these in order for them to become part of the record for QuickBooks. So if you see it here, it's not in the bank account in QuickBooks. So when we are setting this up for the first time, we only want to import transactions. Smart way is just from the current month that we're in. So just start as of September 1. A lot of business owners that I work with will want to go back to January 1. Earlier in the year, most people would say, well, I need all of the prior year because I haven't done my taxes yet. Just know that entire feed is going to come in there from that time, no matter how many transactions that you've got going on in your reg, and you will have to do this process for every single one of those transactions. It's good in the sense that you will then have all of that data in QuickBooks. It's bad in the sense that it's a lot of information that you're going to have to be sorting through right off the bat. It's a great learning experience though, because you will make a lot of mistakes in the beginning. You will learn as you continue to go through. So once we have done all of our categorizing, so this is another, what does our bank feed look like right now? So we've got all these to go through here and categorize. You'll notice this little green guy right here called a rule. That means that I have specifically told the system that anytime it sees Walmart, that it's going to be a cost of goods sold. There's something sub that you see the colon, there's a sub account that's after that that I can't necessarily see. But if I've set up a rule, I want to make sure that that rule is correct. Rules can be your worst nightmare. They can also be your best friend. I'll say it in a future slide, but I caution setting up rules at the beginning when you're not real sure what you're doing. I've seen a lot of disasters from rules that were set up improperly. So please get used to setting up these different things first, to categorizing them yourselves. And if you do set up a rule, please make sure that you don't auto confirm it, that you are testing it. Once you've tested it and you're sure that it's working correctly, then you can go ahead and start to auto confirm it. Auto confirm basically means it feeds into the system, it goes directly into your bank register, and you never saw it. That's why you want to make sure that it's working correctly. Examples of that, something like account maintenance fees. If something with the word account maintenance or fee pops into it, that rule may try to categorize it to something that it's not supposed to be. Walmart, if it's not always cost of goods sold, it's not going to be something that you can use a rule for. You can set rules so that it chooses something that it's most often, knowing that you may then switch whatever that is. You will notice that QuickBooks will automatically put a lot of categories on things. Do not trust it. I've tested this in a lot of webinars before. The general consensus is that QuickBooks is right about 50% of the time. And that's 50% of the time after someone's been using the system for a while. So QuickBooks is learning from you as time goes on. It's also making things up. So it's pulling from the bank description or the bank detail over here. You cannot change or update the bank description or bank detail that is coming directly from your bank. But it's pulling some information from that, or like I said, it's using historical data. So it may even put the from or to up there, and that may be completely wrong also. In order to update or fix something, you can either change it directly off this screen depending on what it is, or if you click this line anywhere, you can click it to open the line and it will give you the ability to change things on a higher level. Once you've got it to where it's supposed to be, then you hit post. If it is something that you proactively put in QuickBooks, which we're going to talk about proactive or reactive here in a second, if you proactively put it in QuickBooks, so maybe you uploaded a receipt from the app, like I talked about before, maybe we invoiced a customer, or we just haven't received the payment, QuickBooks is going to recognize that there is something in the system of the same value. It's only looking at the same value as something that hasn't been matched yet that has to do with the same bank account, and it may tell you that there's a match. If you know it's supposed to be a match, so you know it's something that you did before, then you're going to want to go back and look for that match if the system didn't do it automatically. Generally, the reason it won't match is maybe those numbers are off by even a penny. Remember, it has to be the exact same value. And maybe you accidentally said it was a transaction with the credit card and really it was the bank account. So it's not going to match to something that isn't in the same account. So when we're categorizing these transactions, we're always going to review them no matter what. We can click anywhere on our line to open that transaction. We can make necessary changes, then we need to post it. And then I always do my little thing, say no to rules for now. Just for now. They will become your best friend once you know what you're doing, and that will help you decrease the amount of items that you have in that bank feed all the time, because you've got rules set up that you're tested and you're confident with how they're working. There is a sample company, so this is the link to it. You guys can go into the sample company even if you don't have a QuickBooks account. Normally, I would have gone in there right now. However, The sample company is with the old interface, not with the new interface yet. So to save you the headache of seeing the old versus the new, we're not even going to go in there and look at it. So proactive accounting then. So I said there's a difference between what we call proactive accounting in QuickBooks and reactive accounting. Most of you are going to start out in reactive accounting. Reactive accounting, in my terminology anyway, is you connect the bank account and then you're just categorizing, reconciling, looking at reports that way. As QuickBooks will tell you, it is the quickest, fastest way to generate reports. And it is. So you've got a bank feed, you categorize it, you pull a report, right? We do the process of reconciling. We're going to talk about that in a minute. We do the process of reconciling to make sure that all of our values are correct. We look at our reports to make sure all of our categorizing is correct, and then we're confident in what we're looking at. However, you will, as a business owner, start to get on the more proactive standpoint. Reactive meaning you've already spent the money, right? It's just coming in from the feed. What's done is done. On the proactive side, we're actually putting it in the system. We know when it's happening. We're looking more in that accrual standpoint that I talked about, where we've got accounts receivable that have started. We've got accounts payable that have started. And so we start to look at the different workflows in QuickBooks where we have expense tracking or money out. This is where we're putting vendors and contractor information in the system. We're tracking bills and upcoming payments. We're paying bills. We're categorizing our expenses, we're saving our receipts, and we're generating 1099s. These are all proactive type ways of managing our finances. Then we've got our income and sales tracking side of things. So we've got money coming in. We're entering customer information. We've identified our different products that we sell or our different services that we sell. We're creating estimates or invoices. We're receiving payments against those invoices. We're tracking our open estimates. So we're keeping track of what we've got out there as potential revenue coming in. We're tracking our open invoices. Those are accounts receivable. And also we are doing sales tax reporting here. If we are proactively managing our finances, there is one menu that you're going to be using often, and it's this plus create button. When we click plus create, that is kind of our jumping point to get to all the functions that we would do on a money in, money out standpoint that I just talked about. So this is, you can see them broken down by columns. So do I want to create an invoice? Do I want to receive a payment? Do I want to make an estimate, a sales receipt? Vendors, do I have an expense? Do I have a check, a bill? I can add a customer and I can add a vendor just by going to one of these functions. So I have a brand new customer. I've never even put them in the system, but I need to invoice them right now. Right when I go to choose the customer, it's going to let me add new from right there. And the same thing's going to happen with a vendor. Maybe I received a bill from a vendor I've never used before. Same thing. I can go ahead and enter that vendor right at the very beginning when I go to say who is the vendor that is for this bill. I can also do payroll from here if I have payroll in the system, if I use QuickBooks Payroll. And then I also have things like bank deposits. Remember, I mentioned undeposited funds. The funds are just sitting there. Then I need to create a bank deposit. Right here's where I would create a bank deposit, and then I would choose all those individual transactions that become part of that bank deposit. I can also do journal entries, pay down credit cards, lots of things in that menu. So how do I know if I did everything correctly? As I mentioned before, we're going to be doing all the day-to-day things, entering all these transactions. We're either going to be reactively just handling that in our bank feed, or we're proactively going to be using parts of the system. Then we've still got our bank feed probably going live because we're creating matches. So simultaneously, we're going to be doing both. We need to do a process then called reconciling. So we're reconciling our accounts monthly, which is basically like balancing our checkbooks, balancing our loan amounts, things like that. And then we're going to go look at our reports. So reports, reports, reports. We do all of our day-to-day transactions. At the end of the month, we get those bank statements. We reconcile it, and we know that all of our values match. So we know that our bank account statement matches what our bank register says in QuickBooks. And if we have extra transactions in there for whatever reason, then we need to do something about them, because otherwise those transactions are just continuing to build up in our bank register in QuickBooks, and it's going to give us a balance that's different from what it says in QuickBooks versus our bank. If you noticed in my example here, I'll go back to it, of my bank feed, this poor soul right here has a posted amount, which means in the QuickBooks balance, they have $39,000, 245.17 in QuickBooks. That's the posted amount. That's what QuickBooks says. But their bank says they have negative $62.23. There's a big problem between what's in QuickBooks and what is within their bank. One thing right off that I noticed, they've got 99 plus transactions that they have not posted to QuickBooks. So maybe after they get through these 303 is what the actual number of transactions. Once they get through these 303 transactions, that posted account and that bank account may come a lot closer. Then they probably also haven't reconciled for a long time. So we reconcile monthly. So even at the beginning, if you feed in all that information for 12 months or whatever, you still have to do this on a month-to-month basis. And so this is what the reconciling screen looks like. You're going to want to know the beginning balance of the account. QuickBooks is going to give you a beginning balance in the reconcile screen. If that beginning balance is different than what it says on your bank statement's beginning balance, there's going to have to be an adjustment made, or there was an error made that was made previously that somehow is thrown off that beginning balance. Then you're going to take that ending balance from your bank statement and you're going to put that on the reconcile screen, and then you're going to put your ending date. And what QuickBooks is going to do is it's going to give you every single transaction in QuickBooks that you have that happened in that account prior to that statement end date. And then you're going to check these little bubbles. Crystal's asking a question about her beginning balance being different. If it's the first time that you've reconciled, that beginning balance is you can adjust that very easily with a opening balance adjustment in your bank register. You'll probably see that your opening balance might not have been correct, or something has gotten deleted or added that was on a previous reconciliation in there that's throwing off that balance. Somebody would have to look at that specifically for your situation, though. Those are generally the two ways that those beginning balances will get thrown off. So obviously you can't reconcile unless your beginning balance and your ending balance are correct. And you're going to either be choosing that, but you can, these little bubbles are automatically going to check for you if it's something that has cleared your bank. So that's going to help you. Your ultimate goal here is to get this difference to zero. Once you get that difference to zero, then you can say finish now. However, if you have those transactions in here that for some reason are unreconciled transactions, which means they aren't part of the bank statement, remember those transactions are still on your bank register and you will need to resolve them because that's throwing off your bank account. With you, Crystal, if that's the first time that you just started, then that beginning balance is wrong because in your bank register, when you connected your account or you uploaded it, the actual beginning balance wasn't there. So there is an adjustment that's going to have to be made to the opening balance of that account to get it to be the beginning balance so that you have that correct. Once we've done the process of reconciling, so I recommend start with your checking account first, then go to any credit cards because your checking account tends to have the most transactions within it. So we've reconciled everything. Then we need to go look at our reports. I would go to the profit and loss first and then to the balance sheet. And when we're looking at these for the first time, this may be literally the first time we've looked at it. On these reports, you're going to see a breakdown of all that categorizing that you've done over time. And you can click the value on each report and see every single transaction that you've got in there. And if there's something that you categorized wrong, or maybe over time you learned that that was the correct place to put it, it's super simple. You just click into the value again, it opens up the transaction, and you can fix the category at that point. So this is where you're ultimately double checking all that work that you were doing over time when you were categorizing. So always be looking at your reports and double checking yourself. A minimum is that you're looking at it once a month as opposed to looking at it, quarterly or even yearly, because over time those transactions can build up. Quincella said, when should we add our bank account? You said not to at first. That is correct. When you're doing the setup, do not connect your bank account right then. Look, once you get into the dashboard, go directly to your chart of accounts, review your chart of accounts, clean it up, inactivate things, know what's in there, understand what your chart of accounts looks like. Then you can go connect your bank account at that point. But you need to be confident and comfortable with the accounts that are in there before you could ever tell the system what accounts to choose. So you need to know what the names of the assets are, what the names of the liabilities are, the equity, the income, and the expenses. So that you can accurately say to the system, yes, it's always going to be this expense account, or it's always going to be this sales account, so on and so forth. So that's really going to help you when you start to post things. So in the help menu, I mentioned there is a help menu. There's a little circle up there with this question mark. You do want to ask yourself, is it a software issue? I can tell you the majority of the time it is not. It is very rare for it to be a software issue. There are times where it is a software issue then, and if it is, you will need to contact QuickBooks. Even if it's a bookkeeping issue, user or data issue, a lot of people fall into the pitfall, they contact QuickBooks, and you will get stuck in the vortex that is QuickBooks, and you will be passed around to a lot of people and you may not get your question answered. I've worked with a lot of very, very frustrated business owners that have really like, I've asked them this question over and over and I never get my answer and I've wasted all this time. And really in the end, it was a bookkeeping issue or a data issue. And not a software issue. Remember, they are a software company. They do have experts on staff that will wonderfully manage your books for you for a fee if you want to. But you can also then you can keyword search, you can use AI, you can watch YouTube videos. Like I said, the YouTube videos are getting updated daily because of the new interface. So all those accountants and everybody out there that uses QuickBooks every day are updating all their YouTube videos. There are step-by-step tutorials all over the place, anything and everything that you need to know in QuickBooks. Even though the user interface has changed, so the menu, maybe the step-by-step side of things have changed, but the concept of the workflows, nothing has changed there, right? Those terms are all the same. It's really just that initial menu that has changed, or where those items within that menu may fall have changed. So if we ask Google, like we did before, do I still need an accountant if I have QuickBooks? The answer is yes. That will help you immensely with that. And then we get to questions. So that is the end of all that. Tabitha, our bank account was linked when we went through the wizard the first time prior to your words of wisdom. Yes. Will we create any issues with us going back at some point? So yes, you will create issues. And this is one of those reasons that I truly preach about avoiding doing this at the beginning. So Tabitha, the biggest thing, and to anybody else who may have already found themselves on the other side where they've got a connected bank account and they now recognize that their chart of accounts may need cleaned up. There are two ways to do this. One, you can do this directly from the chart of accounts. If it's an asset, a liability, or equity, remember those have a value and you will physically be able to see if it's got a $0 or something greater than that. As long as it still says $0 in the QuickBooks balance, you can inactivate it with no issue. That means that you've never put any kind of transaction to that. You've never categorized anything to it. So you can shrink it just by looking at that. If you have already categorized something to it, so it has a value on it, then you can click into that register, see what it is. And if it's something that's not supposed to be there, same process that I talked about with the reports, you can change that category and move it to the correct one. So maybe you've just got it in the wrong place. Once you get it to 0, then meaning there's no transactions there, you can then inactivate it. If it's an income or an expense, then those two items, you will notice, as I previously said, they don't have a value that you can see in QuickBooks. You will need to pull your profit and loss report. I would run the profit and loss report for all dates. And when you run it for all dates, you can see if you've ever categorized anything to that particular income or expense account. If you have, you can't inactivate it, otherwise it will still show up. You can't take things away that you've already put there. However, you'll notice on your profit and loss report, if you can't see it, then that means it still has 0. You can go through and inactivate things that way. If it's an account that maybe you did some of those sub accounts because you thought you wanted to be super detailed in the beginning, you just need to move them out of that into the main account, and then you can go back in and activate those accounts. So Tabitha, I hope that helped you. It's a little more work on the back end once you've already got things there, and that's why I caution to go ahead and do the cleanup prior to connecting the accounts, because the system really will force you into going ahead and categorizing things. Quincella, yes, you can start now and just start in October. That's fine also. You're just not going to connect a bank account until it's October 1st, but absolutely, if you have gone ahead and said, you're cleaning up your chart of accounts, you've started to look at things, then when October 1st comes around, you can go ahead and have that date set to October 1. Cindy, when we link electronic payments methods, Venmo's, cash, yeah. You you want the business name but not the personal name in the link. So depending on whatever the setup coming from Cash App, Venmo, whatever it is, that bank detail, remember you can't update that. So if it's a personal Venmo or personal Cash App and it has your name tied to it, that's driven by the app, not by QuickBooks. Hopefully that answered that. I've got about 1 more minute if there's any final questions. Otherwise, I hope that I've grabbed everybody's questions as we were kind of going along there. You are absolutely welcome, Cindy. Thank you.
Christy, thank you so much.
Absolutely. You're welcome, Emily. Thank you all for joining us today. We appreciate it.